Lizzie, thanks so much. For more on today's release of GDP for the second quarter, we turn now to John Herrmann of Bloomberg Best. Bloomberg Best means we only bring you the best people on the economy, economists who are the most accurate forecasters in the world. John is the senior fixed income strategist at State Street. He joins us now from our Boston newsroom with more. John, welcome back to Bloomberg News. Always good to have you on.
Same here, Mark. Great to be with you.
John, that GDP number today, we're seeing that stocks and commodities are gaining even after this number. Your thoughts?
You know, this is a very big relief from our standpoint. Our worst case fears and anxieties were not met in this report. The report came out much more balanced than what we saw with incoming data going into the report. Namely, we had better consumption, better business spending, strong profits, consumer savings rate is elevated. The inventory drag, this is really pretty key. The inventory drag was actually better balanced. And so what that means for us looking ahead is that the ISM manufacturing index, for example, it is a very good chance now of remaining above 50 over the second half of the year.
Right.
Businesses will not have, manufacturers will not have to pull back so dramatically to bring inventories into line,
sure,
that kind of thing. The trade gap, although it really did widen, it widened as a result of sort of an anomalous increase in consumer goods for 1 or 2 months, and that should ebb and slow. So looking forward, we were worried that we could potentially grow below 1.5% over the second half of the year.
Right.
And now our view is more closer to 1.5 to 2. We could hit the 2 number, which
John,
would be pretty decent.
But John, might I add though that we've had guests on today and throughout the week, and of course there is still concern about this apparent slowing of the economy and all of the indicators, at least what we were getting this week, housing data, jobs data.
Yes.
It would seem that is this a crisis of confidence, as I asked a guest this week? Is it the psychology of the market? Are we in the media partly to blame? Are we the ones who are trumpeting that the sky is falling when you believe, in fact, it is not?
Well, the thing is, we were partly in that group because we had the low interest rate forecast for the last 3 months on the
ran your models, didn't you?
So, but we had to rerun the models, and that's it. And, we are now a little bit more upbeat on the second half of the year. And, again, some of our worst case fears are pulled out. That said, we are not out of the woods yet. We know that. And we're worried. We have to monitor the labor market conditions very carefully going forward.
Right.
That is clearly still an issue. The housing market, as you're saying, we could be setting up for a little double dip in housing in terms of prices and that kind of thing.
And there's
foreclosure rates still very high.
That concern about job creation or lack thereof. I wanted to ask you in our last 60 seconds about Mr. Bernanke's comments today in Jackson Hole, saying that the Fed's going to do all it can to ensure a continuation of the economic recovery. Did his words today allay some fears on the street?
The initial reaction wasn't so favorable to his comments, but I think when people looked at things and took away a more balanced perspective, which is that GDP was not cratering and crashing right at this point, number one. Number two, and Ben Bernanke said when he sees evidence of it, he's ready to step up and use the full force of the Fed's balance sheet to basically do everything he can to prevent the economy from a hard landing.
Right.
So we have to take that away. We have to know that business profits are still good. The fundamentals for business spending are still solid. Consumers can tap savings going forward. We critically need employment growth to start picking up and for wage growth to maintain a turnaround and improvement. We need all of these things, but we have to take away the comfort that Ben Bernanke is there to really provide full force when needed.
All right, John Herrmann, State Street, a Bloomberg Best, joining us from our bureau in Boston. Always good to talk to you. Thanks.